if you need the money in 2 years and it would be for a car purchase, I'm not sure if mutual funds would be able to cover the difference or to bring it to 500,000. There's a chance that it could, but there's also a big chance that it won't. Hey guys, so in this video, let's talk about mutual funds, on how you can actually grow it, what are the underlying conditions, and what makes mutual funds unique, and is it actually something that's for the short, mid, or long term as an investment, and what are the financial goals that mutual funds would actually hit, and how could you actually multiply it and make it actually bigger. This is me answering the questions that you guys sent out via YouTube comment section. So if you guys have any questions, feel free to put them down below in the comment section so that I can make videos from the questions that you guys have sent out. So this is from Robert Earl Nurkic. My wife and I are saving 14,000 a month currently. At that rate, it's only 168,000 a year. If we want to save or achieve 500,000 in 2 years instead of 3, are mutual funds an advisable or viable route? Thank you. We plan to use the passive income from mutual funds to pay for a possible car purchase. So that's a very interesting question. If you try to compute it, the 168,000 a year is basically around 336,000 pesos in 2 years. And the goal is to make it grow from 336, the money, the capital that was put in, to make it grow to 500,000. So if you try to factor it in, and that's about 48% return in about 2 years. Let me structure this in a way to give you context also on what mutual fund investments are. In my opinion, mutual funds are investments that you would place in, you would slot in if you want to invest for the long term. When I say long term, at least to put years into it, bare minimum 5 years, but effectively 10 years. But if you're asking me from my own standpoint, if you have a shot that you don't touch, you don't take out your mutual fund up until the time you get very, very, very old, the better. Mutual funds are long-term investments, especially if you are investing in equities. We don't know how the market will perform in 2 years. The market right now is slow, that there's a chance that since it's slow right now, that in 2 years, it could possibly go up higher from where it actually was. I've seen markets move up dramatically, even mutual funds in a 2-year period. However, we don't know if that will be the case over the next 2 years, and there's a lot of variability attached to it. What I normally tell people when it comes to mutual fund investing is basically have a very, very long horizon. Should it go up 48% in 2 years instead of going up 300% in 8 years? Because here's how it could possibly go. It could underperform for 2 years, 3 years, 4 years, but all of a sudden, market turns bullish, that it compensates on the back end, or the 5th, 6th, 7th, or the 8th year also, to compensate for the years that it's lagging. So please do note this, that the market, especially stock, it does not move in increments that are the same per year. There will be years that it will be lagging, there will be years that it will be bad, there will be years that it will be down, but down years should be the time for you to be able to stack, should be the time for you to be able to add, so that when it turns bullish, so that when the market conditions are more favorable, what you placed in, what you stacked when it was lower, would turn good for you. So to answer your question, if you need the money in 2 years and it would be for a car purchase, I'm not sure if mutual funds would be able to cover the difference or to bring it to 500,000. There's a chance that it could, but there's also a big chance that it won't. There's a lot of variability in between. But if you want to take that possibility, you want to take that chance, what's nice about mutual funds is it's liquid, meaning as you start contributing, as you start putting in money, and then suddenly you hit that 500,000, even if it's not yet in the 2-year period already, you can take that money out, pocket it already, and then you can use that money for the goal that you would like to hit. And for this question, it's buying the car. If the target gets hit prior to the 2-year period, well and good, take it out, cash it in, and use the money to buy the car. However, you also need to set yourself up that what if at the time that the 2-year period is up, it's still far from 500,000, or in the same way the market is still down, or it has consolidated, it just moves sideways, and you're not significantly up from your position, or worse off, it may be lower. So that's one condition you must consider also, that if your time frame is not that long, by the time you need it, it might be down. People always think that, is it enough to hit my target of the goal that I want to get? But that's an optimistic scenario, that's a positive scenario. You also must look at it from a risk standpoint. What if by the time you actually need it, it's actually down? what are you gonna do? What if you need the money already to buy the car? Then that would actually mean that you would have to sell your funds at a loss. You would have to take in the loss for you to be able to take out the money at that particular point in time. I would only put in money for mutual funds, especially for funds that are connected to equity, for targets that I want to invest in for the long term. I'll say this over and over, for investments that you don't plan to touch. That's why it's so important to create a budget, because what you put in your budget are the things that you spend, you use to be able to operate normally. Anything on top of that should be money for investing, so that no matter what happens to your investments, you will still be able to live a normal life. Your budget and you operating normally should be the most underlying and most important thing that you should have. Then your mutual funds should follow. That's why it's so important that what you put in there is an excess. What you put in there should be an amount of money that you don't plan to touch, you don't plan to use, because that's where the power it is for it. Now, that being said, how do you hit your goal to be able to hit the car? What I'd possibly do there is maybe I'll park it into some fixed income instruments that will give me a smaller yield, but it's liquid during the 2-year period, that I would be able to touch it already and withdraw it without the possibility of downside. Again, when I say without the possibility of downside, that actually means also that the rate of return will be lower, but it doesn't matter, because the goal for you is not really growth. The goal for you is that during the 2-year period, you get to have the money so that you can buy the car. So with that also, you need lesser volatility because you need the cash at that particular time. To cover the extra, that's about 170 plus thousand pesos. I highly suggest this. Since you have 2 years, try to find a side hustle, try to find a side job, try to find something extra that will allow you to get the difference. And it could be you selling products, it could be you selling services, or it could be you doing something on your free time to be able to cover and make up for the difference. That's something that's better, because in a way, you lose nothing, you lose time. But if you lose time also, which is very important, you gain the experience that will make you a better entrepreneur also later on. But at least when you need the money, whatever you contributed is still there. And if a side job actually makes more money, it may not hit that 500,000. You already have extra money that you could actually use, that you could add on top to buy the car. Now, what if it's at a 2-year period already and then you still haven't hit that 500,000 pesos for you to be able to buy the car? If you were able to live 2 years without the car, one thing that you could actually do is extend the timeline. And that's one way for you to actually do it. Instead of making it 2 years, maybe make it 2.5 years, or make it 3.5 years, until you get the money already for you to be able to buy the car. So that's one thing that you could actually do. But I highly suggest this, make that your motivation, that if you want to cover the 170,000, you have 2 years. What are the things that you could actually do in order for you to get that 170,000 in 2 years? If you try to actually divide it also, 170,000 in 2 years, per year, no, that's about 85,000 pesos per year. If you divide 85,000 pesos into 6 months, that's about 42,500 in 6 months. If you divide 42,500 per quarter, that's about 21,000 pesos per quarter. That's about 7,000 pesos per month. So try to think of something, what can I do on a monthly basis that will allow me to earn 7,000? When you chop it up into small bits, it becomes easier to digest it, and suddenly it doesn't become so intimidating already, that if you try to look at it from a large figure, from a long period of time, it looks very, very daunting, it looks very, very intimidating. But when you chop it up smaller bits, then okay, 7,000. I think that's feasible. I think I could actually do something. If you are at a point in your life that you don't have enough assets yet, or you don't have enough capital yet, trade off your time, trade off your effort, trade off your skill set for you to be able to earn more. And that's what you can have to build your nest egg. That's what you can have to be able to build the dreams that you actually want to get, or whatever items that you want to hit for the long term for you. I hope that this was something that was useful. Please do remember, mutual funds, very, very powerful for the long term. Mutual funds are very, very powerful. If you don't touch it, you continually add to it, and when the market is down, you continually stack. You buy the dip, you build the base while everyone's scared. You build the base with money that you don't plan to touch and you don't actually need into assets that you really, really understand the most. If you want to gain money for the short term, trade in your time, effort, skills, and expertise in order for you to be able to earn more. If you don't know what it is yet, try to spend your time to learn more. I have hundreds of videos here in YouTube talking about side hustles, businesses, success stories of other people. You can just check it out also. Or you can also try trading, which is a higher degree of risk, which you have the chance also to lose more as well, which places a greater degree also that you may actually, if you do leverage, it could possibly go to zero. If that's not for you, then it's okay, because there are other investments out there. But check it out down below. We have a lot of free videos for you. If you want to learn more about stocks, NFTs, and cryptos, check it out down below. We have a masterclass course designed for all of you where we're going to talk about all of these things. Or if you want to trade using technical or fundamental analysis, links are down below as well. So similar to what I said at the start, if you guys have any questions, feel free to put it down below, and I'll try to make videos on top of the questions that you guys have asked. This is Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.